Do not chase stocks just because you want to participate because you feel that everyone is making money off of it and you are not. Marvin, makapag-business ka sa akin. Kaso yung company namin, for the past 5 years, bumababa yung benta. We're not actually selling as much. But invest ka sa amin. Mura kami. We have a very, very promising future. Hey guys, so in this video, I want to share how I screen and select the stocks that I want to buy, especially for my long-term portfolio. So for this video, I just want to focus on and drill down if you are an investor, and most likely I want to give you examples that are related to Philippine stocks because I tend to value companies in the US differently, primarily because I've been exposed to a lot of tech stocks, and the way you treat tech stocks are very, very different from the way you treat traditional businesses. Because if you try to deep dive and look at how Amazon was and how Tesla was also a couple of years back, they literally were not making any money. They just kept growing and growing and growing and growing. And the way you approach and the way you would analyze these companies would be massively different from the way that you would analyze companies that are traditional in nature. People are asking this, how do you screen stocks? What's my mechanism for me on how I would go through stocks on a regular basis? So my answer is very, very simple. I don't look at all 270 stocks or 200 plus stocks in the Philippine Stock Exchange. I don't look at them. I don't have to go through them on a day-to-day basis. But there are sometimes, maybe once in a year, that I would look at them, screen them, but more or less, I just look at around 50 plus stocks in the Philippine Stock Exchange. And please do note this, that there was a post a couple of days ago that said that out of the 200 plus stocks that are listed, only 90 is actively traded. If I'm looking at around 50, then I'm just looking at the ones that are relatively actively traded already. Whatever is in my watch list, whatever are the stocks that are in there, those are the ones that I'm faithfully either watching, analyzing, looking at on a regular basis. There are some pros and cons to that, and there are some things that I have to also live with. If there are certain stocks that do very, very well that are not part of my watch list and then they start to go up, I have to live with the fact that, okay, I'm not gonna participate in it because it's not something that I'm watching. Please do remember this, and for everyone watching this, no matter if you are long or short in the market already or you've been investing for a very, very long time, do not chase stocks just because you want to participate because you feel that everyone is making money off of it and you are not. That's the best way to lose money. Always buy stocks based on what you're currently watching already and what's part of your plan. Because at the end of the day, kung tumalon kayo doon and then you jump the gun without the proper due diligence on your part, it's true you can make money, but it's also true that you can lose a lot of money. It's true that you can make money, but it does not build confidence, it does not build strength, and it does not build investing acumen. Why? It's not something that you can repeat again. If you've been following a lot of my videos, I would always say, look at where the economy is going, look at where the cash is going, because when you know and you follow where the economy is going, it gives you a shot, it gives you a sense that this is where I know people will be spending their money. Prior to the pandemic, I loved malls. I saw it that people would be continually spending in them. But if you've been out in malls lately, you've noticed it even on holidays, even on days where there's sales considered to be a mall-wide sale, there's not a lot of people anymore. Of course, transactions are still there. People are going direct to the companies because they can order via their website online or they can go to these platforms. But I don't know, even after this pandemic, if malls will be as strong as what it was before. If this pandemic drags on longer, behaviors of people will change. People don't like biking prior to the pandemic. You rarely would see people bike around because it's so hot here. But imagine, because of the pandemic, it's now become a thing. Biking has become massively, massively big already. And the fact that they're allowing bikes in major thoroughfares already in the Philippines speaks volumes of how things are changing. Even if this pandemic is over, as much as possible, I'm still gonna do most of my meetings via Zoom. I'm gonna do most of my meetings via calls. Why? Because it's efficient. because it works. You don't have to travel 30 minutes, an hour, 2 hours just for you guys to meet and go back, and then your whole day is already wasted, where you can do everything from the comforts of your home, where you can do everything from the comforts of where you are at. I really believe it's still gonna be anything online, and I've said this in so many videos already, but that's how I would drill it down. Then there are some companies that I know will be built to last, companies that are market leaders, they have large amounts of cash, companies that have shown a track record that they have been resilient through extreme times also in the economy, and they up against the competition are very, very far. The first thing that I would always look at is, I just look at the sales, but not just the sales. I want the sales to be increasing on a regular basis or on a yearly basis. It means that maybe most likely their market is not saturated yet. Their sales are increasing. That actually means that they are beating out their competition. They are innovating, adding extra sources for them to actually earn. They may have found a product and they've maximized it even more that it appealed to a broader audience. Every time you buy a company today, you will not benefit anymore on what it has earned over the past few years. You will only benefit from where could it possibly go from the point that where you actually bought it. That's why it's so important that what you're buying is built to last. What you're buying is where the money's headed. And then you look at the track record of sales. Last year was a pandemic, rightfully so. It was a pandemic. For the companies that increased their sales last year, that's something worth looking on to. That's a company that is maximizing. That's a company that is still doing well in this new normal. So please do remember this. I want things to go back to where it was before, but I don't think we're gonna go back to how it was before. But it just shows you and it gives you a template already. Those that did well last year have innovated, have pivoted, have shifted, and the numbers are backing it up. And if they were doing well last year, there's a big chance also that, okay, they've fully adapted to this new normal. Then for the next few years also, the sales from last year would be a base for them. There will be some companies also that will take a hit for sure. And it's evident because even our GDP shrunk last year. Instead of the GDP of the Philippines growing, we actually shrunk, meaning the GDP last year was lower than what it was in 2019. For companies that their sales last year were lower, what I would do is I would drill down on a quarterly basis, because most likely the second quarter last year dragged whatever sales that they actually had. I would look at the third quarter, the fourth quarter, the first quarter of 2021. Then, as they release the results of the second quarter for 2021 as well, I will look at if there's an ongoing trend that it's recovering from where they were second quarter 2020, the third quarter, the fourth quarter sales of 2020, and then the first quarter, the second quarter sales of 2021 should be massively higher than what it was as compared to the second quarter of 2020. But not just that, it's nice to see an increasing trend that on a quarterly level, that they are doing better. And that shows you also that a recovery is imminent. That shows you also that, hey, things are actually getting better from a sales perspective for them. What I will be wary of is if it has dropped, and then as it has dropped, it's still not recovering. It's still in 2020 levels, even though we're at 2021 already, meaning most likely their customers are gone. The market has shifted from what their product or service is. Most likely the competition has beaten them also. That's a red flag already. So please do remember, sales, you want it to be increasing. You don't want it to be flat. You don't want it to be declining. For last year, you could be more lenient because at the end of the day, last year was a pandemic that no one predicted, no one projected. It's more about how their sales has bounced. Should they have been affected for the second quarter of 2020? There's so many things still to unpack in this now when I start analyzing. I look at dividends, I look at the net income per se, because the net income tells you how efficient the company is in terms of spending the money that comes across their way, paying their taxes also in an efficient way. Then I look at how liquid they are, I look at the ROE, I look at the cash that they currently have. Then I look at also their debt to equity ratio. I want to make sure that I don't want to be heavily invested in a company that has a massive amount of debt in them versus their equity. Please do note that it's not wrong for them to have debt because a lot of companies get to maximize their resources even more because they get to borrow cheap. So those are other things. So I'll try to discuss them in different videos, but please do let me know, are you enjoying this type of discussion? Anyways, we've just talked about how I start to filter things out. We just talked about how I look at it, where the money's going. Then I look at sales. Right after sales, there's so many things that I prioritize also when I start analyzing the company. But sales for me is the gatekeeper. If I'm not impressed by it anymore, then I don't move on to look at the other facets of it, because that has to be the most important thing. You don't want to buy a company that's not selling very, very well. It's just like you have a friend that comes to you and says, Marvin, makapag-business ka sa akin. Kaso yung company namin, for the past 5 years, bumababa yung benta. We're not actually selling as much. But invest ka sa amin. Mura kami. We have a very, very promising future. Pero yung sales namin, di talaga kami nakabenta. Would that interest you? Would you want to buy something that it sounds good? It's a great pitch. Pero the numbers are saying that they're not really selling very well. I'd be worried about that. Sales is so important. It's not everything. There are other facets also to consider. But if they got it wrong from a sales aspect, then I don't want to get into them as well. If you guys have any questions about what I discussed, put them in the comment section. I'll either reply or make a new video of it based on the questions that you made. If you guys have other questions, feel free to message me via Instagram or Patreon. And if you want to join us, we have a stock market / crypto technical analysis class, which is happening via Zoom online next week already, Saturday, Sunday. Then the week after that, Saturday, Sunday. They are all half-day sessions, which will be done via Zoom. Links are in the description below if you want to join us. I have 5 National Bookstore best-selling books. You can check them out in National Bookstore and via the links below, Shopee and Lazada as well. And if you want to trade US markets, check out GoTrade. Links are in the description below. You can buy US stocks for $1. You can invest in Binance. You can buy cryptocurrencies for $10. That's the minimum for you to be able to invest. Bring mo $10, that's 500 pesos. Or you can trade the Forex markets also, where they're giving you $30 bonus for you to sign up. It's via XM. Links are all in the description below, and I hope you guys got a lot from this, and I hope that this is something that has been very beneficial for all of you, that this is something that added value to you, that this is something that's a light and easy discussion also about trading and investing. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.